Welcome to the Daily Brief, where I'll go over the highlights in the market for Tuesday, October 4th, and then we'll see how things look for Wednesday, October 5th. And we had two really strong back-to-back up days. Has the situation changed, or is this still just a bounce after being pretty extreme negative? We have bounced off pretty solid support, but we've risen pretty far, pretty fast. So what do things look like going forward? So I'll just go through the highlights of what I'm seeing here. Right at the open, we gapped above R1 at 37.16, and we also gapped above R2. We never got up to R3. That was way into the 3800s. The midpoint between R2 and R3 was at about 3800, and we never got to that. But R2 was at 37.54. As the day went on, prices continued to climb. Then we saw a little bit of a fallback, but not all that much. And they almost got back down to R2 before resuming their climb. So that's pretty positive, at least in Tuesday's session. And we ended up closing right at the high. That's positive as well. We ended up being up 3.06%. And get a load of this. On Monday and Tuesday's session, we are now up 5.65% just in 2 days. That is a massive move for the market. Can't say that everything's fixed and that this is all done and we can just throw all our money into the market now, but hey, at least it's an improvement for right now. Volume was above average. The technicals are still negative overall. In fact, on a short-term basis, we have some indicators that are already overbought, while other indicators are still trying to get out of being oversold. Inflation and interest rates continue to be the main concern with things, but we have the whole list of geopolitical events: Russia, Ukraine, Russia, the pipeline, different rhetoric and rumblings that are going on in that whole situation. It looks like things have calmed down a bit in the UK, at least for the time being. And then any Fed speak that we might get that might help guide the market. So, what are some comments? On Tuesday, the Reserve Bank of Australia, because they're 1 day ahead, so it's like tomorrow always there. The Bank of Australia, or RBA, they raised their rates 0.25% when everybody was expecting 0.5%. And now you've got all these folks going, well, maybe the US could do something like that too. They said because officials recognize that the cash rate has increased substantially in a short period of time, they're just doing the interest rate attached to the Australian dollar. And they want to take some time to assess what's this doing to everything and what's this doing to inflation. And so we're just going to take it a little bit slower right now. And so the US, not to be outdone, is hoping that the Fed will eventually, if not sooner rather than later, adopt the same kind of scenario. Now, this has happened many, many times, no matter how we justify this, no matter how we look at our charts and see that things might be improving, only to have them dashed at some point. Now, eventually, it's going to actually come through the way that the markets hope that it will, but we have to be really suspicious of that until we get some more confirmation. At least that's my stance. We still have the 30 to the 5, the 10 to the 2, and the 10 to the 5. Those yield curves are inverted. Sentiment is no longer extreme, but it is still fearful. The S&P, and this is a chart that I show in the full-length video, where if I measure from the time back in August when we hit the moving average down to the low that was set on Friday, we've already retraced up 38.2% from that. That could act as a short-term resistance level. And we also have some other indicators that are already overbought. If the bounce continues, we might have this thing called, I call it FOMO, and I left the O out of there. It's the fear of missing out, because everybody is totally convinced the market's going in the toilet. It's never going to go up again. They've gotten out of the market, or they're just hunkering down, hoping that their losses aren't all that great. Well, if we start going back higher, then that greed thing is going to kick back in and people are going to be fearful and they're going to start jumping back in. That isn't necessarily developing yet, but it could. And a lot of times when this does develop, at least in 2022, that's just about the time we top out. And we've seen that a few times this year. Also, Elon Musk is apparently renewing his bid to buy Twitter again. I thought that was all off the table, but apparently it's back on the table now. Our economic reports, factory orders came in unchanged where they expected them to be up 0.4%. So that is weaker than expected. Bad news is now good news. The JOLTS job openings, that's also decreasing. They were at 10,000,053 following the prior reading, which was up over 11 million. And if you recall, the month before that, it was in the 12 millions, if I remember correctly. So we're starting to see the job openings coming down. Now, that's still a lot of jobs, but still, it is declining. Our trend is still negative. The red line's still on top. It is weakening now with the two powerful up days that we've seen, but we're still above 20. Our bias is positive because we've had another really good up day. And I've switched our momentum to mixed right now. If we have another up day, it might switch more to positive, but we've gone up really fast here. So that's why I'm a little leery right now of this. So what's our outlook for Wednesday? The technicals are negative, but improving. Some of them are still oversold, and we even have a few that are overbought. Can it continue? That's the big question that we're asking. We have the MBA Mortgage Applications Index. That's a weekly report that we have. We have ADP employment change. That's the monthly report that we get before Friday's employment report. Trade balance will be coming out. The final IHS market servicing PMI. And the big one is this last one, the ISM non-manufacturing. We already had the manufacturing index come out, and that's a biggie. This one will also be coming out, and that might really help set the tone for the day, whether we're weaker or stronger or in line with what the market is expecting with that. We got the whole list of geopolitical events, Russia, Ukraine, and then just Russia by itself. That's kind of at the head of the geopolitical concerns. But the markets are still fixated on the inflation and interest rates. So our scenarios, it's kind of hard to go with the down one right now because the technicals, yeah, they're still negative and we're wearing off some of that oversold condition, but we still have a lot of indicators that are still oversold. We even have a few that are overbought right now, and we're kind of mixed across the board technically right now. We can't really go with the up scenario yet because we haven't even gotten back to a moving average, at least the ones that I look at. I think we're above the 10, but when you get to the 20, the 50, those are still like dreamland above where we're at right now. We're at a fib level in the short term that may be acting as resistance right now. And it's hard to go sideways currently because ADX, even though it's declining, is still above 20 and it is negative. So what's our conclusion? The S&P, it's still negative overall. It's rebounding from being oversold and showing some improvement. Short term, we already have, as I've said 3 times now, some are still oversold while others have become overbought. Intermediate term, we're showing some improvement, and long term, we're still pretty much oversold there. It's going to take more than just 2 days, no matter how strong they are, to really change the long-term look. So thank you. Please feel free to check out the full-length video. I have a scenario, a very short-term scenario that I did within that video that you might find interesting. It's just taking some charts and what I'm seeing and putting it together, and we'll see if I'm even close to what actually ends up happening. So have a great day, and I'll talk to you after Wednesday's session.